G'day Internet, Max right here, and super excited today to have Juan Villaverde with us again. Juan, thanks so much for being with us.
Thanks for having me, Max. Always a pleasure.
So interestingly enough, guys, you don't know this, but Juan and I were all set up. We had scheduled a time to do this thing last week, and Juan was just like, man, I don't like this. I don't like this at all. It's showing that it should go down, but there's some things telling me it should go up. This is not clear. This is just a neutral position. It's going to be a boring. Let's wait a week for some price action. We get some more confirmation, then we'll do the video. So here we are a week later. We sure as hell got some price action. Bitcoin jumped up significantly from where? The 25s to the 30s, basically.
Yeah, basically.
Am I remembering correctly? Yeah, 25s to the 30s. And so why don't you walk us through, let's recap for the viewers. What were you seeing? And if you need to put up your screen to show us, what were you seeing that was like a little from column A, a little from column B last week? And then this week, you feel like you got a little more confirmation. Walk us through your logic.
Okay, so let me share my screen first because I want you guys to see this. So when we were chatting last week, Max, Bitcoin had crossed. It was, I believe it was on Wednesday that we were speaking, or on Thursday. Doesn't matter. So basically what we were discussing is the fact that Bitcoin had crossed this uptrend line, the orange line you see here, right?
And why don't you just zoom out a little bit so we can see the origin of that trend line?
Yeah. So the origin is you need to connect, there's a swing low in late December, early January. Then there's a famous March 10 banking crisis low. You connect those two lows, project that line forward. This is what I'm looking for. And this is the key line that I'm looking at. Now, I need to be clear. Everything except Bitcoin crossed the same line months ago. So everything except Bitcoin looks a lot more bearish, and it looks a lot like what I was expecting. Now, doesn't matter because Bitcoin is the leader in the crypto market, so it doesn't really matter what the altcoins are doing. And apparently that includes ETH as well, which is pretty strange, but never mind.
When we were speaking, let's just pause there. Let's just pause here. So that day that we were chatting, what are we going to call it here? We're going to call it 13th of June.
I believe it was the 15th. It was the 15th of June. Thursday.
Okay. Now, I remember you saying this to me. You're saying, listen, Ethereum's crossed its important line. All the other alts have crossed the line. Usually all these things go in tandem. And you were saying Bitcoin just crossed it as well, but not in the most compelling way. And you're like, you got a lot of reasons to suggest that this is a signal for a trend reversal, and the broader trend that's on the screen right now, the uptrend is about to reverse, and we're going. This is confirmation of a downtrend, and we're going to continue down. You had a lot of arguments to support that thesis, but there were some things holding you back, and you're saying, I don't want to lead people astray. I don't want to confirm that. What was holding you back from saying this is confirmed?
Okay, so let me try and make this as simple as possible. What was holding me back is that it took 2 months to cross that line. When I had that line, you may think that I just drew the line recently. No, I've had this line up since mid-March, ever since it broke, ever since it went to 27 for the first time this year, right? So I've had this line for months. I've been looking at this line for months. I've been expecting this line to be crossed for months. What I didn't expect is that Bitcoin would take so long from the top, which was April 14, that it would take 2 months to cross this line. This is just too long. And what I mean by that is, if Bitcoin falls for 2 months, my model says it's about to rally, right? In this type of market, a 2-month correction gives you a decent rally after 2 months, which is pushing it really. So what I'm saying is, when we last spoke, Bitcoin was way overdue for a rally of at least 20%. And this is what gave me pause. A rally of at least 20% from 25,000 takes you up, which is here, it takes you up to 30,000. Right? So what I was saying, so what my model was saying was mixed signals. It was sending mixed signals because on the one hand, it said, okay, cross this uptrend line. That means there's a large cycle, a 240-day cycle that has topped out. It topped out in April. That's good. It's also saying at the same time, hey, it's been falling for 2 months. You're probably going to see a 20% rally. However, if you do the math from 25,000 plus 20%, that's 30,000. So what I'm saying is, hey, it's going to retest that April high. And that's what gave me pause. That should not happen. It should not retest this high. Why not? Because when Bitcoin retests the prior 240-day cycle high, it has always crossed above. So I can't be saying, hey, I think the high for the year is in, and it was in April, but also, hey, it's going to retest it and cross above it. These are contradicting signals.
So can you're talking about a 240-day high? That means if we go back on the
Correct.
chart 240 days, I'll see another high?
You're going to see a low. So you're going to see the bear market low. So remember, I measure cycles from low to low. And this one was about, I think it was a little shorter, but yeah, never mind. It's well within the range. So it's 205 days.
I see. Okay, the 200. Okay,
Yeah.
so it's not peak to peak; it's peak to trough. So 240 days earlier. That's what you were confusing me because I knew in my mind there was no peak back there. Okay,
No,
it was a low.
Yeah, it was a low. So what I was saying is, from November through June, there's a larger cycle. I usually track about a 90-day cycle. It's 80 days. So an 80-day cycle is about a 3-month cycle. But you put 3 of these together and you have a larger cycle. It's about 8 months. Let's call it 6 to 10 months, right?
Okay. Yep.
So what the model was saying is after 2 months of falling since from April through June, after 2 months, you have a correction that is deep enough or long enough to be looking for a 240-day cycle low. And just a breeze would have taken Bitcoin from 25 to 30, like I said. So this was giving me pause because Bitcoin was very oversold in the short term from a timing perspective. Now, from a price perspective, it fell like about less than 20%, I think it was. So this correction was only 18%. That's nothing. That is nothing. Let me put it this way. That's the type of correction you see in a bull market. This 240-day cycle falls by less than 20% only in bull markets. So what I was seeing is bull market type of price action in a year where I was not expecting a bull market. I'm expecting a bull market next year. So again, this was giving me pause. It was like, well, I'm seeing the cycle like I expected. I'm seeing this prolonged correction like I expected, but it's just Bitcoin refuses to go down. What's going on here? And it's probably going to go back up to 30,000. And it is there right now as we speak. It's 30,500. And what I want to emphasize here is that when Bitcoin retraces back to its last cycle top, so when it does this is the last 240 high, right? This is the last 240 high. When Bitcoin retraces back to that 240 high, in the past, it has always crossed above it. Always. I was looking for this. I spent one night looking for this. I was looking for just one case where Bitcoin would retrace to its last 240 top and not cross above it. I couldn't find it. I couldn't find it in a bear market. I couldn't find it in a neutral market, in a bull market. When Bitcoin goes back to its last 240-day cycle top, it goes above. And so last week, the reason I didn't want to come out with a very strong message was, well, I mean, I'm pretty sure it's going to go back to 30,000. Bitcoin's at 25 now. It's about to rally according to my model. It's very likely that it goes back to 30,000. And therefore, it's very likely that it goes beyond 30,000. Because it won't just go back to 30,000, which is the last important cycle top. It's going to go beyond. And so here we are. This is the market we have. It did right now as we're recording, it's testing 30,000. What I'm saying, I'm pretty confident of this. It will go across. It will go across. How high? I did some numbers, at least 38,000, possibly beyond, but we'll see. Because the type of price action we're seeing now is more indicative of a bull market, not really a neutral or a sideways year or transition year. No, it looks like a bull market, which is, again, confusing. Because if you look at everything else in crypto, nothing else is this bullish.
Right, and there's a real disconnect there between all the altcoins and everything else, and we're seeing that reflected in the Bitcoin dominance. Really taking off.
Yeah, the ETH to BTC ratio also just collapsed. I mean, I can bring that up. So this is another chart that I'm looking at. So I look at this a lot, and you can see this is the ETH to BTC ratio since June. It is just taking a nosedive here. So it's only Bitcoin that's doing this. And the altcoins look far worse, far worse. I mean, one of the ones that I look at a lot is Curve, kind of a favorite in crypto. Curve is just dead. It topped out in February. There was no March rally. There was no April top, nothing. It's just collapsing. If you look at the total capitalization of altcoins, which is, the ticker is total 3. So if you look at this, this is the market cap of all altcoins, except for Bitcoin and Ethereum, retesting the bear market low. No rally. I mean, yeah, sure, it went up a little. These I'm highlighting here, although this is the bear market low, the top this year so far, and then the nosedive that followed. So this is kind of what the transition year looks like. If you look at this chart, it's just, yes, the bull market, the bear market is behind us, but the market is in no hurry to go anywhere. But Bitcoin looks very different, looks strong.
Okay, and that's what we would typically see when you come out of the bear market year, you go into a transition year, and then the next year beyond. Typically, Bitcoin outperforms ETH and alts.
Yes,
and then later on in the boom years, the Ethereum and alts catch up very, very quickly. Is typically what happens.
Yeah, correct. So that's not totally unexpected. What is unexpected is to see Bitcoin saying very clearly, "Hey, I'm going to go beyond 30,000. I'm going to make new highs." Well, everything else is saying, "Wait a minute, maybe not." That I've never seen. And that's never happened before. I think the transition year that we all probably remember is the one in 2019, or most of us remember 2019. In 2019, there was a powerful rally between, let's say, January and June.
14,000.
Yeah, it was super strong. Ethereum also, I don't remember what the prices were, but an impressive rally. But they both topped out around the same time. They both went down around the same time. So everything was lined up. We could see that, yes, this is probably the high for the year, which is what I was saying at the time. But this I've never seen.
I'll just pause you there. I'll just draw our viewers' attention to something. You'll notice when I speak about Bitcoin history, it's in my head. I just know it's like, oh, in 2019, price went from 13,000 to 3,000 to 14,000. It's just there. It's in my head. Juan was like, oh, I don't know what the numbers were. I know it went from January to May. But he's a timing cycles guy, and when he looks at these, he sees the times, and that's what means things to him. But I'm more on the price side, and the price means more to him. So when we speak in different languages often, it's just something fun for you guys to watch, as we both have different kinds of models, different kinds of techniques that we model things in our head. So I thought I'd point that out to our viewers.
Yeah, that's fascinating. I always look at it in terms of timing. Like I know the dates. I know the dates of the months, how long it happened, but I don't remember what the prices were. It's just it's secondary to me. I do look at prices though. If you notice, I did say, hey, it went down for 2 months, but it only fell by less than 20%. That told me something. This is what gave me pause. This correction, Max, should have been in the order of 30 to 50%. Should have been. This is what I was expecting. 30 to 40% from April to June. If I had seen 30%, I would have said it's over. It is absolutely over. But I saw less.
This bull market rally is over.
Yeah, this 2023 rally has come to an end. But we saw less than 20%, which and the time came to rally. So the market moves in cycles. That means there's a time to go up. There's a time to go down. After 2 months of falling, it was time to go up again. And again, I think the smallest rally that I've seen on the 80-day cycle, which is the thing that was due to rally, was 20%. That was the smallest rally that I was expecting. So again, back to the highs. And intuitively, I knew, well, if it goes back to the highs, doesn't that mean it's going to go across? And I thought, yeah, maybe not. I need to check it. I need to look into this. I didn't actually look into this until I saw Bitcoin at 30,000 again. And then I said, oh shit, I have to look into this. Has Bitcoin ever rallied back to its previous high without crossing above? No. There are no double tops in crypto, and at least in Bitcoin. There are no patterns where you see this. Just imagine the black arrow being the future path of prices. This has never happened.
I think you have a qualifier in there that you're not articulating. You're not saying, it's in your mind, but you're not saying it out loud. What about the two all-time highs of 65,000 and 69,000?
That's different. Let me explain what I mean by different.
Yeah,
Yes,
no, I know
a
you
lot
know.
of I know a lot of people are pointing to that being a double top, but I'm talking a strict double top. In other words, let me zoom in, move you here. So I'm talking about Bitcoin. So this is the April top again, April 14, exactly like 2023. Market moves in cycles.
Mhm.
What I'm saying is we've never seen Bitcoin. This is one of the tops. And if we see an exact double top is this. So the top was right there, October 20, the first time that it got back to that April high. It did spend a few days above it. So it's a notorious, you might say it's not an exact double top in the sense that this high is 64,000 and this one's 69.
Okay.
Maybe that's what we see. So maybe that is what we see. However, I would also point out that there is a lot of time between these two tops. There's a lot of time. This is not a retest of an 80-day cycle high, which is what I said, right? I know that this can get complicated, but this is a 240 top, and this is a 4-year cycle top. So these are different scales.
Different models, different timing.
Yeah, there's several cycles in this model.
So that was that when you made the comment that it never rallies back up to a double top.
Yeah, on the 80-day cycle. On the 80-day
that's what I was getting at.
Cycle. Okay,
That's exactly what I was getting at. That's the part that was in your head that wasn't coming out.
Yeah.
On your timing model, on the 80-day cycle, that doesn't happen.
That doesn't happen. Correct.
Gotcha.
All right. So what we could see, and I believe this has happened, what we could see is, so there's several scenarios here. My base case now is we're going to see new highs, possibly to 38,000 and maybe even beyond. But I don't want to overcommit there because I don't know. I've never seen this price action before. So we don't know. We'll take it, one cycle at a time. What could happen potentially is that it doesn't cross right now. It actually falls. It makes a low around, let's say, mid-July, and then it goes to 38,000. This we could see. We could also see a new high. So again, it does go beyond, but it goes to 33,000. And then it goes below. This will be quite strange, though. This has also never happened. Again, this is why I'm turning more bullish here, because what we have seen is once it gets back to the previous 80-day cycle top, it just keeps going. That's it. It makes it's like a noticeably higher high. And then it makes another 80-day cycle correction. And then we'll see. Once we see the next 80-day cycle correction, which is not doing for 3 months, then we'll see what happens next.
Gotcha. So just leave the screen there for a second, because I think so in my mind, you're talking about 80 days. Oh, no. Put the screen back, please. I want to talk about that screen.
Okay. Sorry.
Yeah, no, you're good. So where your green line starts, I think it's April there.
14.
Because
I think it's the 14. It may not be the 14. Yeah, April 14. Okay. This is where the green line starts.
Yes. So that was an 80-day cycle top.
Correct.
Then when we go down, we touch the orange line. That's an 80-day cycle bottom.
Let me correct you there. This is an 80-day cycle top, and it is also a 240-day cycle top. These are lined up. So the tops are all lined up. A 240 top is also an 80 top.
In this particular case?
Always. They're always lined up, yes. It's part of the rules of the model.
Okay, you just broke my mind. How does an 80-day top and a 240-day top always arrive?
Let me show you.
80s? Yeah, please.
Let me show you. So this is an 80-day cycle. Okay. Now let me change the color. And this is a 240-day cycle. Understand? So one goes from November through June. The other one started in March, and it goes through June. The cycle that I'm describing with the orange lines is made up of 3 80-day cycles.
Gotcha. So let me say that back to you if I understood that one correctly.
Yeah.
The 240 cycle tops are always aligned with the 80-day cycle tops. But there are
Correct.
then there are multiple 80-day cycle tops that are also aligned, that are not aligned, because obviously there's just more of them in the period.
Correct.
Okay.
So this is like the basics of the cycles model, is that you have wheels within wheels, they used to call it. So it's cycles within cycles within cycles. So I'm showing you here the orange. I know it's a bit of a mess, but the orange arrows are a 240 cycle, and the black arrows are describing the 3 80-day cycles within that larger 240-day cycle.
Gotcha. Now let's stick with your downward sloping orange arrow. Why is that 80 days long and not 240 days long?
The last one here, this one?
Yes.
Why is it what?
Why is it 80 days long? It's an orange arrow. Your first orange arrow is 240 days. Why is your second orange arrow 80 days?
Oh, so a cycle goes from low to low. So the cycle is this entire thing. It's the rally component and the sell-off component. All cycles have a rally component and a sell-off component. Not what you're asking.
Okay. So when we talked about the 80-day cycle, so with the 240 cycle, you're telling me that was from trough to trough.
Yeah, it's always from trough to trough.
But when we talked about the 80-day cycle, didn't you say it was from peak to trough?
No. It's always trough to trough.
Oh, I'm going to get the instant replay guy to come back and talk about this. I think you said that earlier. Maybe I'm misremembering.
No, I think you're misremembering, or I misspoke. But no, it's always from trough to trough. Also, okay. So the duration, when I speak of the duration of a cycle, I'm talking about strictly low to low.
Low to low.
It's low to low. Now, of course, we can study the correction component and the rally component. For example, if the rally is longer than the sell-off, that is a bullish cycle. Obviously, spending more time going up than down, that's bullish. And you can see that all of these are bullish. If you count the number of days, actually, not necessarily. I mean, this one isn't, but again, we're getting into the weeds. This is because the last 80-day cycle correction coincided with a 240-day cycle correction, so it can be longer. Again, there's a lot that goes into this model. It's not that simple.
And as you draw that out, it starts to look a lot like Elliott wave theory.
It's kind of what I like to say is that Elliott wave is part of this, so it's included. The Elliott wave patterns are part of this model, but unlike Elliott wave, I'm not expecting 5 ways up, 3 ways down, or whatever. I actually read both of Elliott's books when I started doing this. This is far more comprehensive. Let me tell you a story. Like I threw away Elliott when I looked at a chart of bonds, long-term chart of bonds. I was like, "There's no Elliott wave here. This thing has been going sideways for years." Back then when I was looking at it. So bonds had this very, very, very long sideways pattern. I'm almost like, there's no Elliott wave. I mean, this is not what Elliott described at all. So I scrapped that. Yes, I've seen the 5 pattern thing play out. It does happen. But the thing is, this model allows me to predict what's going to happen, and Elliott wave doesn't. So it can, once you've identified the move and whatever, but then you just, at one point, you start making up stuff. Like, oh, this is an extension of a correction within an extension. It's like, what is that? This model is not like this. It's clean. It's 80-day cycles, 240-day cycles. There's a 720-day cycle. There's a 4-year cycle. I think there's also an 8-year cycle in crypto, but I mean, we've only been trading crypto crypto has only existed for 14 years. So yeah, we need to wait for confirmation of that 8-year cycle.
Understood. All right.
Yeah.
And I'll be interested to see how well this video is received, because you and I just got to geek out a little bit there, and I really, really enjoyed it. But it was probably might be a little bit too in the weeds for our viewers. So let's bring it back to some basics. There's a couple of base cases going on here. And so just let's recap with some clarity what I think there were 3 scenarios which you said could possibly play out, and assign some probabilities to each, perhaps.
All right. So the base scenario now is that Bitcoin will break above 30,000. It's going to go to potentially 38,000, which is what I have here. I have 37.5. Let's say this. Yeah, we should be there by late July. This is the base case. And then it's going to fall into a low in August, late August. So from now to late July, that gives us another month, goes up to 38,000 at least. From late July through late August, it's going to correct. From then on, we don't know. Again, the reason we don't know is because this is a cycle we've never seen before. We've never seen this right after a bear market. This is bullish price action. I mean, at this point, we have a bullish 240-day cycle. Never seen that before. So base case goes to 38,000, takes about a month, then it falls for another month, and then we'll see. We'll be chatting, so I'll keep everybody informed. This is the base case. What may also happen, there's another two things that might happen. I say the base case about 70% chance, let's just say. Within that, I would say there's also maybe I'd say there's a 10% chance that it actually just goes to 33. It goes to 33,000. And this happens within the next 2 weeks. And then it just falls. And then it falls and it goes back to 25, possibly below 25. This is, yeah. You know, if you put a gun to my head on probabilities, I would say 10% because this has never happened before. So,
okay.
All right. So that would say 10%. And then there's a 20% chance that we see a significant correction, right? But it stays above this uptrend line here, the orange line.
And wouldn't it, you've done that a couple of times. Would you not expect that to bounce off the orange line?
So the model, this is why I love this model. It doesn't work like most things. The trend lines are just levels that tell you that either a cycle has stopped or bottomed. They're not resistance or support. There's no expectation. They don't have to bounce off a line, which never made any sense to me. Like, why does it have to bounce off some line on some chart? That makes no sense. What makes more sense to me is, these are signals. These lines give me information. Being above the line tells me something. Being below the line tells me something. So this is how I use them in the model. I don't use them as support or resistance. You can use them to set up trades. Because if Bitcoin is bouncing off a line, you know that if it goes below, you get stopped out. But if it doesn't go below and it finds support there, you have a great trade in terms of risk reward because you're basically picking the low. Gotcha. So then there's that's it, 20% chance that this is what happens instead. It fails to break 30,000. It goes back to 28, and then it goes above, and it goes to 35. Let's just say by let's say mid-August. So I know I'm saying there's a 90% chance it goes above 30,000 and at least 35,000. Yeah, I'm saying that this is a pretty bullish looking chart.
Okay, so if you're not going to be a sophisticated trader with stop losses and validations and things like that, with a 90% probability, if you can stomach a 10% downswing, with a 90% probability, we will see $35,000 Bitcoin in a couple of months. Pretty much. There's a 90% probability that what we've seen so far is just the beginning of this rally. It's going to go beyond. And it's going to go to at least 35,000. And I would say very likely goes above 35,000. Gotcha. And I always put you on the spot and make you do price predictions. And you're like, stop doing it, Max. I'm a timing guy. So let me help you out. And now let's go to the timing predictions. So because you're a timing guy, when will we expect this top out? I think you're suggesting it's probably just a stepping stone on a much larger rally, but you are expecting a correction in about when? Oh, late July. Late July. So it would rally, and possibly later. But at least I would give it another month of rallying prices. Gotcha. If you can stomach a 10% correction, 90% chance that we're going to get a rally for another month. Price targets around the 35 to 38 mark. And late July, time to maybe just question whether there could be a pullback and just time to trim up perhaps. Yeah. Also, since we're talking about a potential trade here, notice this trend line. Bitcoin should never, in this bullish scenario, Bitcoin should not be below this trend line.
So it should always stay above this trend line. If it crosses below it, then this is not playing out. This bullish scenario is not playing out.
We're in the 10% chance where this bull market rally is over and we're going lower.
Correct.
Gotcha. And what's the definition of breaking below?
Breaking below is a daily close. Yeah, daily close below is bad
single
enough.
daily close below that orange line. Time to bail. All right. Look at you putting your name on the line with all this specificity. So few people will do that. I love it.
You know, it's not always that it lines up a trade like this, but it is. This I admit, this is lining up a trade. Pretty beautiful trade.
Gotcha. Yeah, I mean, last week you would say, listen, nothing's lining up. It's a little bit incongruent. Let's hold off and we'll chat next week. And now things are a little more in your favor, and you're feeling a lot more confident about a trade. Remember, people, there's no certainties in anything can happen. It's just a game of probabilities. And so, but if you can find situations whereby, according to you and your research, not Juan or myself or anybody else, but according to you, you find a situation where, you know, the risk reward makes sense, then, you know, it's something that you can get involved in. All right, Juan, that was super helpful. Thank you so much. Everybody, hit the like button, hit the subscribe button. If you have any questions for Juan, go ahead and leave them below, and we'll get around to them probably on the next video. Thanks so much. Take care.